In the last class, we discussed various credit policy. Okay, so credit term, credit period, and all we calculated. Among the various plans, which is best also we discussed. In this question number 1, we have taken the variable cost as well as fixed cost both as the total cost. From the sales, we subtracted the total cost. Now, if you skip this fixed cost, what happens? Naturally, your EAT will be increased to that extent. And instead of 1,87,500, if I take only the variable cost, interest on that 37,500 will be reduced. So this will be decreased to the extent of interest on 37,500. But the thing is, 37,500 is added in all the 5 elements, 5 EATs. Interest also subtracted, leaving the interest on fixed cost and all. So naturally the RI will be having equivalent impact, fixed impact. 37,500 will be higher if the rate of interest applied on fixed cost being 37,500, for that rate of interest in this case being 20%, and applicable period in this case being ACP being first case 30 days, like if you calculate that interest remains same. So naturally what happens, leaving the fixed cost will not have any problem in decision making. Yeah, of course, if you don't consider the fixed cost, profit will be higher, right? Though it is higher, it will be higher for all the 5 elements. 37,500 rupees fixed cost is omitted. Current scenario, the profit is higher by 37,500. A scenario also, the profit is higher by that extent. So in all the cases, 37,500 higher means while ranking, you'll get the first rank for B only. There will not be any problem, isn't it? The rank will be the same. For the decision making at the time of ranking, we don't have any trouble at all. That's the logic. Because of the logic, sometimes we never bother about fixed cost. If the fixed cost is not given, no issues, you can proceed without fixed cost calculation. Of course, the profit will have some impact, but ultimate decision based on the ranking will not have any impact. Is that clear? That's the second one. Without fixed cost, why? The fixed cost is irrelevant for the decision. For whatever the decision we make, this fixed cost will not be a relevance for us. Is that clear? Now, X Limited currently has an annual turnover of 20 lakhs and an average collection period is 4 weeks. The company is proposed to introduce a more liberal credit policy, which they hope will generate additional sales as shown below. So these are the 4 credit policies are there. Currently, the ACP being 4 weeks. In our first policy, we extend the ACP from 4 to 6 weeks. Because of this extended ACP, your sales will increase from 20 to 22 lakhs. Another 2 lakhs increases. Because of the additional sales, we face some default also. The default is 2%. Now we have to calculate what is the profit in this scenario. Okay. Selling price of the product is 30 and variable cost is 7. Okay, the difference between these two is the contribution. From there, we can subtract naturally any bad debt loss or any discount allowed that can be deductible. After that, you have to subtract the tax and whatever the net profit you will get after tax. From there, you have to subtract what? You have to subtract the estimated notional interest on the amount locked in your debtors. Okay, that's the logic. Current scenario. Scenario 1, Scenario 2, Scenario 3, Scenario 4. 4 scenarios. ACP. Current scenario, the ACP being 4 weeks. Next is 6 weeks. 8 weeks. 4 plus 6, 10 weeks. Existing 4 increased by 6 means 10 weeks. Existing 4 increased by 8 means 12 weeks. 12 weeks. Sales. In the very first instant, the sales being 20 lakhs. 20 lakhs. Okay. Right. 20 lakhs. I'll put this way, 20 lakhs, rupees in lakhs. Option 1, 22 lakhs. Option 2, 22.5 lakhs. Option 3, rupees in lakhs. Okay. Option 3, 20 plus 3.5, 23.5 lakhs. Option 4, 20 plus 5, 25 lakhs. Variable cost in this case being 70 rupees per unit. Otherwise 70%, 7 rupees for every 10, 70 rupees, 70% will be the variable cost. So here it is 14, here 15.40, here 15.75, and here 16.45. Finally, this value being 17.50. Now you can simply calculate the contribution if you want, else you can skip that also, no issues. Now bad debt loss, currently it's 1%. Bad debt. Current scenario 1%. Because of credit policy 1, the bad debt rises to 2%. And in case of second credit policy, we face a bad debt of 3%, then it is 5%. Finally, it is 6%. Find out the bad debt for each and every scenario. For the current scenario, for 20 lakhs, you have to calculate bad debt the rate of 1%. Hope this may be 0.02. Second case, for 22, 2%, 0.44 lakhs. Next one, 3% on 22.5. Okay, I can round off to the 0.67675. I rounded off to 0.68 lakhs. Then 1.18, 5% on sales. Last one, 6% on sales being 1.50. So from sales, if you subtract these two, you will be getting earnings after tax. Sorry, before tax. Do you have any tax here? No, we don't have the tax. As we don't have the tax, this itself EAT. EAT is otherwise named as the expected profit because it's not actual profit. We only estimate it, so it's called as estimated profit. EAT. So from 20, you subtract the variable cost and bad debt. We have not considered the fixed cost because fixed cost usually irrelevant for our decision making. So it will not have any impact. So if I subtract this, then the value being 5.80 in the very first instant. Second case 6.16. Third case 6.07. And policy 3, 5.87. Policy 4, 6. Policy 4, 6. EAT. From there you can subtract the interest. The desired rate of return on investment is 20%. For calculation, a year is to be taken to comprise 52 weeks. 52 weeks. Now, scenario 1. So we have to calculate the interest expected, notional interest, not actual interest. We estimate a rough interest maybe for our investment locked here. For the investment, anyhow, we have to raise the fund. To raise the fund, we have to depend on bankers or some owners, and they demand some money. What they demand will be your cost. So your intention is whatever the amount you invested for the working capital requirement, especially receivables, you expect some return, which is 20%. So my intention is the profit because of this policy should be higher than the interest we expected, right? So that's the logic. The notional interest I'm going to calculate here is all about variable cost, actually total cost, but in the absence of fixed cost, you can take only the variable cost. Variable cost into ACP into rate of interest. This is the formula. So here the variable cost is 14 lakhs and ACP being 4 weeks. A year consists of 52 weeks, so 4 by 52 multiplied with ACP. ACP being 4 weeks, rate of interest. Rate of interest being 20% or 0.2. So the value being 0.22. Second scenario, your variable cost eat. This bad debt will not have any interest component. Only we can calculate the interest component for the variable cost. That's the amount you invested. The amount recoverable on sale is lost due to the bad debt. It's not my investment. Actually, my profit is reduced. That's all. That may be different. It's not my cash investment. So we never bother about calculating the interest on bad debt. Only interest on the variable cost. Okay. Don't say this is being the cost. And here 15.40 into period being 6 weeks. So 6 by 52 multiplied with rate of interest 0.2. What's the value? 0.36. Use your calculator. Come on, join with me to answer. 0.36. And third one is all about the variable cost being 15.75 multiplied with 8 weeks. So 8 by 52 ACP, rate of interest 0.2, then ultimate value being 0.48 is the notional interest. And then fourth option, the overall investment in asset being working capital, means this with receivables being 16.45, the period being 10 weeks, so 10 by 52 into rate of interest 0.2. So 0.63 is the notional interest for the third policy, 0.63. And the last one, fifth option, where the total variable cost being 17.50 and the period ACP being 12 by 52 multiplied with the rate of interest 0.2. Then ultimate value here being 0.81. Okay. Now subtract that notional interest from the E to find out the residual income. So the residual income in this case being, first case, residual income 5.58, second case 5.80, third case 5.59, fourth case 5.24, last 5.19. So you can simply rank. While ranking, we get huge profit only in the policy 1. So we can recommend go for policy 1. We never bother about the fixed cost as well as interest on fixed cost locked in the variable cost of the sales. Okay, clear? Variable cost for the debtors portion. Now remember, we made 6.616 is my return. Further interest is this much. If I put the other way, what is my return on my receivables investment? What will be my return on receivables investment? If I ask that question, you have to first find out the receivables. Investment in receivables. Investment in receivable is nothing but this much. Okay, 14 lakhs is the variable cost. Out of 14 lakhs, 4 weeks sales remains uncollected. Then what could be the value remains outstanding to be recoverable or balance in the debtors account at cost? What is the value? Come on, tell me. 14 into 4 by 52. 1.076. 1.0 or 1.08 lakhs. Am I right? This is what about the debtors at cost, not at sales. If you want to find out what is the actual debtors as per my balance sheet, you have to take the 20 lakhs. 20 lakhs is the sale value overall. For that 4 weeks, sales remains uncollected. So 20 lakhs into 4 by 52 is the debtors balance as per our regular balance sheet. For the working capital, means especially for financial management, my question is not the amount required for the debtors. How much my money locked in debtors is to be calculated where the profit component is removed. So only variable cost is taken. Variable cost, even of course fixed cost. In the absence of fixed cost, you calculate only based on what? Variable cost, because fixed cost has no role. Fixed cost remains constant at all the options. So if I use 1000 rupees as fixed cost or 1 lakh being fixed cost, this 5.58 becomes 4.58. This is 4.8. This is 4.59. This is 4.24. Naturally, the ultimate result ranking will be the same, right? That's the logic. Even the interest on that fixed cost portion will also be very, very meager. Don't worry about that. That's a logic. You can simply omit the fixed cost. Now, this much of investment, 1.08 lakhs investment made, or your money locked to be recoverable from the receivables. For that you funded somehow, could have been borrowed from third party, or you asked from the owner's friend, whatever the mode may be, no problem. Right? And they demand 20% return. So for their demand 20%, 1.08 into 20%, this will maybe 0.22. That's what about my notional interest. Forget about that. It's your own fund. For this 1.08 of investment for the receivables, how much you are getting? 5.80 will be your return. Now tell me what is the percentage you are earning for your investment. Is that clear? 5.80 divided by 1.08. What is the value you are getting? Come on, tell me. 5.537 percentage in percentage. This is what about return on investment angle. This is residual income angle. This is return on investment angle. Clear? Some case it may be totally different. What is the incremental investment? What is the incremental return? Or returns interest you are getting, return on investment you are getting on the incremental investment. That way also you can answer. So for 1.08 lakhs invested in the receivables, you will be getting 5.80 being your return. So 5.80 by 1.08 in terms of percentage may be 537%. Am I right? You got this value. Second scenario, maybe again you have to calculate what is the value. 15.40 into 6.52. What is the value here? Come on, tell me. Online students can text me in the chat box. 1.78. For 1.78, my return being 6.16, then what is my ROI? 346 percentage. If you refer in this angle, you will get misguided. Okay, you see, first plan gives you only 346 percentage return, but current plan gives you 537. In order to avoid that, you have to find out ROI for the incremental value. What is the incremental investment you do? The difference between these two is the incremental investment. Otherwise, residual income or EAT change or incremental, as well as residual income divided by receivables or investment in receivables change or increase. Your return increases from 5.58 to 5.80. 0.22 is your increased return. And what is the increased investment? 1.08 to 1.78. What is the increased investment? 0.70. Increased investment from the current to the first plan for the debtors being 0.7 lakhs, 70,000. For the increase, your return increases from 5.80 to 6.16. Sorry. Then this may be 3.6. Am I right? This may be 3.6. 5.8 to 6.16. What is the change here? 0.36. By investing 70,000 additionally for the debtors, you will be getting 36,000 extra. Now tell me what is the percentage of return you are getting? This is called ROI, return on investment. I invested so much, I am getting so much return. Then what's the percentage of return I am getting for my investment is called ROI. Come on, tell me. 51%. So 51%. If this 51% is higher than my cost, then I can recommend go for this model. This is also one more logic. One is calculation of ROI model, another one is calculation of ROI model. In case of ROI, incremental ROI will be calculated. The ROI model is nothing but what you call calculate as a EAT. From the EAT, you have to subtract what? You have to subtract the notional interest. Okay. So in case of this one, all right, the EAT what you calculate, okay, from there you have to subtract notional interest. The notional interest is nothing but investment made and expected one. If you subtract, then the value will be residual income named as RI. If the plan gives you more RI, then it's superior one. You can recommend and accept. In case of ROI method, eat, and we never bother about the notional interest. You take the investment. Now find out ROI. ROI is nothing but this way: eat by your investment. The value what you get is in percentage. If the ROI is more than your cost, then you can recommend. Okay, because of investing in this project, I may be getting 12%. For that investment, I need to source the fund where I can go to bank and borrow. Banker gives me only 9% rate of interest. So I borrow for 9%, invest in this business, I'm getting 12%. Naturally, I'll get surplus of 3%. Of course, if there is no risk, you can simply borrow and invest and make 3% nice income. Is that okay? You are comparing that angle in case of return on investment. Return on investment is one angle, RA is the other angle. If nothing stated, you go with the RA model. In RA model, what the expected profit you calculate as usual model. From there, deduct the notional interest. The notional interest is nothing but investment made multiplied with the expected cost of capital for your case. Or sometimes the expected return on investments, and one of the two can be taken. If you subtract that, rest will be residual interest. Residual interest for the funding also we have compensated. After compensating the funding, the ultimate results for my pocket is the RI, residual income for the owner. In case of ROI, I never bother about the notional interest. Instead of that, for my investment, how much return I am getting. That's how I can calculate. If that return percentage is more than my cost or more than my expected return, I just go for this option. Okay. So in the previous class, question number 1, no. This some in our Singar Academy text, I have worked in both the angle. Not only RA approach, I followed ROI approach also. In your book, you can see the solution. So I skip that here. In second, I have given the information here. So ROI can be calculated this way. How? Incremental residual, not residual income, EAT. I can change this. Incremental EAT by incremental investment. Incremental EAT divided by incremental investment will be my return on investment. If the return on investment is higher than my cost, then I can go investing. Clear? Come on, make a note of it. Shall I move on to the next one? CM. Now let's move on to the next illustration. So the question number 1 and question number 2 is all about credit term, in that especially extending the credit period. Okay. In case of credit term, we have two components. One is you can change the credit period. Another one is you can change the cash discount. So now we'll be dealing this one. This one is completed. Now we move on to this one. In case of credit period, I'm extending the credit period. ACP is going to be either increased or decreased. Based on that, you can decide whether this plan is acceptable or not. Next one is I'll give the ACP 60 days, no problem. But I tempt you to pay as soon as possible by offering more discount. So I'll give 5% cash discount to pay it today itself. I'm in need of fund. So by offering this cash discount, I'm making the investor, means the debtors, to pay immediately. ACP will be gradually decreasing. If the ACP is decreasing, what happens? My investment in debtors is reducing. 1 lakh rupees debtors, because of this system, 1 lakh becomes only 50,000 rupees. Automatically, for the 50,000 rupees, my investment locked being very, very lesser. Is that clear? That's how you can think over. You can think over. Clear? For the discount, cash discount, we'll discuss the third illustration. In credit term, we have two aspects. One is changing the ACP. Next one is cash discount. So now I'm going to deal with the cash discount. The present credit terms of P company are 1/10 net 30. Present one, 1/10 net 30. What does it mean? If you pay within 10th date, you will get 1% discount. Else you have to finish up without any discount by 30th date. That's what about the credit term current. Its annual sales being 80 lakhs. Currently, the sales being 80 lakhs. Its average collection period is 20 days. ACP in this case being 20 days. Its variable cost and average total cost of the sales being 0.85 and 0.95 respectively. So variable cost being 85% and fixed total cost being 95%. So 95% on total cost maybe 76 lakhs. What is the value for 85%? 85%. Come on, text me. 85%. 68 lakhs. 68 lakhs. Variable cost being 68 lakhs. Total cost being 0.95 lakhs. Sorry, 0.95%. The difference between these two, 0.1, you know, that's the fixed cost. In this case, fixed cost being 8 lakhs. Of course, if you are given the fixed cost, don't bother include that. Okay, you can include the fixed cost also. No issues. And its cost of capital is 10%. KO, cost of overall capital being 10%. We have a separate chapter for KO. Tomorrow we have the class between 9 to 5:30 or 6 o'clock. I deal with the cost of capital, interest calculations for simple interest, compound interest, annuity, sinking fund, or all the models we are going to discuss in the tomorrow's class. That will be the base for calculating the KO. Once that chapter is over, we will directly jump to the KO chapter. From the KO, we can go for the capital. It's a sequence. Right. The KO is very, very important element for all our financial managements. Okay. Unless you are sure with the KO, you cannot handle the fund easily. Because of this calculation alone, the interest calculation, the chapter I am going to teach you tomorrow, I made huge profit. Okay, if I say the profit I earn, you may be jealous on me. Okay, so you no need to work a lot. Once you understand the rate of interest, and playing with the rate of interest is more than enough to make huge profit. Right. All this history and story we'll study along with the time value of many chapters. Right. So that is the basic. Here I use the term CKO, cost of overall capital, which is 10%. The proportion of sales on which customers currently take discount is 0.5. 50% investment means buyer settles the money in due date, within due date, means 10th date itself, means they are accepting discount. Balance 50% they pay only on 30th date without availing discount. Now what about the discount portion here? Now here the value being 4 lakhs. Now cash discount. Cash discount. How do you calculate? Total sales multiplied with the cash sales percentage. Okay, cash sales are availing discount into discount percentage. So overall sales being 80 lakhs. Out of that, 50% availing the cash discount benefit, and for them we have to offer 1%. 1% discount will be offered. So 80 lakhs. Among them, 40 lakhs worth debtors coming and paying that in 10th date itself. and demanding 1% discount. So now we have to offer 1% discount on the 40 lakhs. What is the value here? 0.4 lakhs will be that. And the company is considering relaxing its discount term 2 bar 10 net to 30. Now they want to change this from 1 bar 10 to 2 bar 10 net to 30. So what happens? They simply increase the discount percentage. Rather than 1%, now it is 2%. Such relaxation is expected to increase the sales by 5 lakhs. Because of this reason, reduce the average collection period to 14 days rather than delaying, because they are getting one extra percentage discount, right? And increase the proportion of discount sales to 0.8. Okay, now earlier only 0.8 enjoyed the cash discount. Now 80% buyers are enjoying the cash discount. Out of the new sales 85, 80% buyers are enjoying the cash discount, and they demand new discount percentage, which is 2%. Okay, 85 into 0.8 into 2%, what is the value? I think it is 1.36. And what about the variable cost? 85% of 85 lakhs will be the variable cost, 72.25. What about the fixed cost? That remains same, will not have any change. So 80.25. And after subtracting the total cost from sales before discount and other bad debt, the profit being how much? 4.75. From there we can subtract the discount. Right. Is there any bad debt? Of course, we don't have the bad debt in this case. Okay, bad debt. We don't have the bad debt here. No bad debt here. What will be the effect of relaxing the discount policy on company's profit? Take a year as 360 days. Now find out the earnings after tax. Earnings after tax being 3.60. Here 3.39. 3.39. 3.60, 3.39. Right. Now what you have to do? I have to consider the RI for the decision making purpose. So I have to subtract the interest, notional interest. How do I calculate the interest? Interest will be calculated as this model. Okay. Total cost multiplied with the ACP multiplied with the cost of capital. Total cost being 76 lakhs in the first scenario. ACP here being 20 days, so 20 by 360 in a year, and KO being 10%. 10%. Now the notional interest in this case being 0.42. By changing the credit policy, now the total cost being 80.25, but ACP rather than 20 it reduces to 14. So 14 bar 360, and cost of capital on this being 110%. What is the ultimate value? 0.31. Finally, if I subtract 3.18, and in this case being 3.08. This is what about residual income. Due to altering the credit term, especially discount percentage from 1 to 2% if you are paying within 10 days, is not meaningful. So you have to reject. We have to continue with the current policy only. Current policy only is the best one. Clear? Now, shall I move on to the next one? So all these things are pretty simple. Here I have introduced cash discount component. For all these things put together, I have given the format here. Sales minus variable cost minus fixed cost. Whenever the fixed cost given per unit should be applicable only for the given level of units. Once you find out the fixed cost in total for the present scenario, that remains constant at all levels. Sometimes you can skip including the fixed cost for our calculation if fixed cost details is not available. Then we have the bad debt and we have the cash discount. The cash discount could be calculated by this way: discount percentage multiplied with the sales to the extent of debtors availing the discount. Okay, 50% sales are means debtors are willing to take cash discount, 80%, 70%, like they will say. The last illustration we have seen. Present scenario, 50% debtors are willing to take the cash discount. Second case, 80% debtors are willing to take the cash discount. So that information may be available this way. Then EBT tax is subtracted to calculate earnings after tax. But for the decision making purpose, we need to have the residual value, residual income. From the EAT, you have to subtract the interest. This interest is not actual interest you are paying. If you are paying the interest actually, it's expenses. Expenses can be debited to the P&L account. Then you will get earnings before interest and tax minus interest. Then you will get EBT minus tax. So after subtracting EAT, you will get the EBT naturally, right? Because it's a charge. Charge is an expense debited to the P&L account. Because of debiting, the profit will go down. For the reduced profit, you have to pay the tax. But in this case, this is not actual interest. It's only notional interest. We estimate, at least you're investing here, no? For this investment, if I invest in bank, I will get 10%. At least I get 10% and more. Only then it's logically acceptable. That's why that interest is calculated as a notional basis here. It's not actually expenses. And after subtracting the notional interest, you will get the residual income. The interest is calculated by this way: total cost into ACP into rate of interest applicable. This rate of interest could be either cost of capital or it may be return of investment. And you can consider one of these two. What is the difference between KO and ROI? I need fund. I can raise a fund from external sources, either from borrowings or from owner's fund, whatever the mode may be. I can borrow from here or there, no issues, right? For that, I have to pay some cost. In case if I borrow from banker, I have to pay the interest. If I get it from the owners, I have to pay dividend. Anyhow, there's a cost, right? Next one is, if I invest, I have surplus fund. If I invest, how much I will be expecting? I'll say, I have 1 lakh rupees. If I invest in bank, I will get 10%. Instead of that, I'm investing here, I need to get at least 12%. There's a risk, no, I'll get more. So, cost of capital is borrower's angle. Return on investment is investor's angle. So, if I'm investing, I demand some money, which is called return on investment. For the borrower, it may be different, right? For him, it's a borrowings. For him, it is KO. Clear? So most of the students will get confused to KO and ROI. In this case, KO and ROI are interchangeable, right? Now, next plan, we'll move on to the credit standard. What is called credit standard? Our customers are now categorized into different categories of customers. Some customers may be paying promptly. Some customers are delaying and paying. Some customers are delaying and defaulting. Some customers won't pay at all. So we'll now categorize the customers. Do I want to offer the credit sales only to the prompt customers, or the people who are delaying and paying? To them also can be offered, or can be offered some extent sales to the person, the third category borrowers or customers. That will be decided here. If I offer credit sales to the all category of customers, the sales will be boosted up. But because of that, delay may happen, which causes additional interest, and default may happen, which costs us my bad debt. So two extra costs will be there. At these two costs, I may increase the profit. The increased profit will be sufficient enough to manage this cost. Means then you can go for offering them also in credit. So because of offering credit to Mr. A, who is actually delay and defaulter. Because of this, we get incremental profit. We get incremental profit being 1 lakh. And because of his delaying, I need to spend for notional interest around 30,000 rupees. And not only that, he defaults some cases. So because of the default, bad debt also comes around 40,000 rupees. Now, By offering credit sales to A, I'm getting incremental profit being 1 lakh, but because of this, I need to spend 30,000 rupees for interest and bad debt 40,000 has gone. Ultimately, I get 30,000 rupees. Definitely, we can give the judgment. You can make the sales to A in credit. Okay, don't neglect to sell in credit to A category. Suppose because of this one, the incremental is only 50. What we can do? Don't offer the credit sales to A category. That's how we can now finish off this category of credit policy. Now, credit policy, credit standard. Now, earlier in these two cases, these three cases, what did we do? We calculated RI for all the models, and among them, the best one was chosen. But in the case of credit standard, we are not going to rank. We are not going to rank. What are we going to do? Are we making profit by offering credit sales to different category of customers? For each and every category of customers, if I am organizing or offering the credit sales, will I be getting net results positive? Net result positive means the incremental revenue should be sufficient enough to manage the interest for giving credit sales as well as the bad loss. Let's see. The credit manager of XYZ Limited is reappraising the company's credit policy. The company sells the products on term of net to 30. Currently, what they do, okay, net to 30 is the current policy. Means they have to pay in 30th the date without any discount. No cash discount policies there. Cost of goods sold is 85%. Sales cost of goods sold being 85%, and then you can get the contribution. Okay, this is variable cost and then contribution. Apart from that, we have been given fixed cost also, which is 5% on sales. XYZ classifies its customer on a scale of 1 to 4. Their customers are classifiable this way: 1, 2, 3, 4. 4 varieties of customers. 4 varieties of customers. You forget about the first option. Okay, 1, 2, 3, 4. Customer 1, customer 2 category, customer 3 category, customer 4 category. And during the past 5 years, the experience was as under. The customer classified as number 1 has no default, and the ACP is also 45. ACP being 45 days. And default being 0. Is that okay? Now, how can we calculate, sir? In earlier cases, we have been given sales. Because of policy 1, the sales increases so much and bad debt also increases so much. Such a way, points are given. But here it is not so. Then how can we solve? We assume if I offer the credit sales to A, say 100 rupees. If I offer him credit sales for rupees 100, my variable cost portion being 85, fixed cost portion being nil. Why? Here you should not consider the fixed cost. Already we are doing the regular business. For the existing regular business itself, we recovered the fixed cost. Hereafter, by offering additional sales to category A or category 1, I'm not going to spend additional fixed cost. If a new student joins, I need to spend for the new material. Right? What happens to the hall rent? No hall rent. So the material cost may be 2,000 rupees. Even if I charge 3,000 rupees, I may make 1,000 rupees profit. If new student comes today, if I admit him for 3,000 rupees, what happens? Next time you will be striking. Isn't it? Sir, give me that one also. Then I have to share with the share auto like. Okay, this is the rent you have to cope up. So this is what about my income. You bring all the students and cope up with. That's how I had to talk. Which is not possible, right? But here, if I offer the credit sales, a new customer will come. Because of the new customer, I can get 100 rupees say. Then definitely I have to give the material, which is the variable cost. What about the fixed cost? That already absorbed. Never bother about the fixed cost here. We never bother about the fixed cost here. In this case. Okay, in all other cases, you can consider fixed cost. No need to consider the fixed cost. But in this case, we never consider the fixed cost. For every 100 rupees sales, incremental variable cost is 85. Your contribution be 15. The same happens for all the four category. If I offer credit sales to second category customers, I will get 100 rupees, 85 will go on contribution being 15. Here also 85, contribution being 15. Here also 85 and contribution being 15. But what happens? That's a bad debt. In first case, we don't have any bad debt. In second case, 2%. For 100 rupees of sales to category 2, I lose 2%. 2 rupees has gone. For the third category, 10% has gone. And fourth category, 20% has gone. Okay. Now, what about the ultimate result? Ultimate result. Okay. This is earnings after tax. 15 gain, 13 gain, 5 gain, 5 loss. Okay, 5 loss. Now what about the interest component? Interest will be calculated how? How do we calculate the interest? Interest is equal to, okay, and variable cost into ACP into rate of interest. Here we no need to consider the fixed cost. Incremental cost is only variable cost, so we can take variable cost only. So first scenario, 85 and 45 days. Year consisted of 360. But in our text we have considered 365. I will take the 365 here. That's your choice only. So 45 divided by 365 into rate of interest being 15%. 1.57. Second scenario, 85 into 42 will be the ACP divided by 365 into 0.15. This value being 1.47. Third scenario, 85 into 40 days, 40 by 365 into 15%, 1.40. Fourth one, 85 into 80 by 365 into 15%. This value being 2.8. Okay. The ultimate answer then, first case 13.43, 11.53, 3.60 and 7.8 negative. Can I offer credit sales? Credit sales offer. First case yes, second case yes, third case also yes, only the last case is no. Don't rank here. Sir, first rank goes to the first category. No, it's not talking about ranking. It's all about what can we offer. If I offer credit sales to the third category, even for every 100 rupees incremental sales, I'll get 3 rupees 60 rupees benefit. If I offer the same to the fourth category, I'm actually losing. Negative value comes here, 7.8. 7.8. Clear? Let's move on to the next one. Now, the last one is all about collection policy. Collection policy. Clear? We'll take some efforts to collect. With that, the first variety is over. Credit policy will be completely over. collection policy with the tax but without fixed cost model. Now, WIPGR Limited is considering relaxing its collection effort. Its sales are 100 million. Its average collection period is 30 days. Okay. So, what about the present scenario? Present scenario. Sales being 100 lakhs. 100 lakhs. Okay. ACP being 30 days. Rupees in lakhs. Rupees in lakhs. You have to mention all these things in your question. Rupees in lakhs. Its variable cost to sales ratio being 75%. 75.75 variable cost. So 75. Its cost of capital 14% and its bad debt is 0.04. 0.04 means you will get 4 rupees being the bad debt. 4 lakhs. Tax rate being 30%. Tax rate. If I subtract these two, what happens? I'll get 21 will be the EBT. Subtract the tax here, 30%, 6.30. I'll get EAT 14.70. 14.70. 8. The relaxation in collection effort is expected to push sales by 10 million. If you are relaxing the collection efforts, so you have a serious or stringent collection effort, means periodical reminder. If delay is there, we'll send a collection representative to collect and constantly monitoring all these things. That will be called collection effort. So we are relaxing. Relaxing means sending the messages as well as sending the representative may be reduced or number of visits may be reduced. If the collection effort is relaxed, automatically there will be more buyers. Because of this reason, the sales is pushed by another 10 lakhs, so new one. Rather than 100 lakhs, now it becomes 110 lakhs. The increase of average collection period is to 40 days. Hereafter, it increases to 40 days. And raise the bad debt ratio to 0.055. Then for 110, variable cost 75%, right? 75 paise in a rupee. Naturally, for 110, 75% may be 82.50. Bad debt being for 110, you have to multiply with 0.055. If I multiply with the 0.055, the answer being 6.05. EBT being 15. You have to subtract these two. 15.01. And you have to find out the tax at the rate of 30% on this, which is 1. How much? 6.44. Am I right? No, this is wrong. Okay. This value being 21.45. And you have to calculate tax rate at the rate of 30% on this, 6.44, round up to the 2 digits. Finally, EAT being 15.01. And of course, you can subtract the interest component. Interest component being 14%. Variable cost multiplied with ACP into rate of interest. For the first case, 75 lakhs into ACP being 30 days, 3 by 360. 30 by 360 into rate of interest being 0.14. This value being 0.88. In the second case, 82.5 will be the value. Then the ACP being 40 days, 40 by 360 into applicable rate of interest being 0.4, which is being 1.28. Your residual income being 13.8 to 13.73. Clear? What will be the effect of relaxing the collection efforts on residual income? Residual income is decreasing. If you are liberalizing the collection efforts, huge bad debt is there. Unless you ask, you will not get that money. So you are not getting this money. 4 becomes 6.05. 4 becomes 6.05. So it's ends with loss in residual income. Right. So you can continue with the present scenario, present policy, not the new policy. In Singer Academy text, I have solved using ROI model also. In case of ROI, what you have to do? Calculate EAT by investment in receivables. Investment in receivables. Investment in receivables is nothing but variable cost into ACP is the investment in receivable. This will be called investment in receivables. So, in case of EAT, I means ROI, the formula being EAT by variable cost into ACP or simply receivables, investment in receivables. First case, EAT being 14.70 and your investment being, come on, tell me, 6.25. 6.25. You represent that in terms of percentage. Hope this will be 235 percentage. 235 percentage. In second case, the EAT being 15.01. Incremental investment being this one, 9.17. So 9.17 is the amount invested in the investment. For that you are getting 15.01 EAT. Then ultimate result being 164 percentage. If I see the ROI model, that also not recommends the new proposed one. You have to continue with the stringent collection efforts only. Now, in credit term, especially cash discount may be applicable some cases. In that case, credit term may be given and you are supposed to calculate what is the rate of interest hidden here. What does it mean? 2 bar 0 net to 30. A year consists of 360 days. If you make the payment at 0th date, for every 100 rupees of purchase, you will get a cash discount of 2 rupees. So you have to pay only 98. Okay, this is payment for cash purchase. This is payment for credit purchase. 98 you have to pay if you purchase by today itself, or pay the balance in today itself, or if you are making the payment on 30th date, you have to make the payment of rupees 100 without any discount. Otherwise, you have to pay 2 rupees excess, 100 minus 98, 2 rupees excess for 98 rupees of payment over 30 days. Over 30 days. Is that okay? Then what is the value you are getting? 2 bar 98 in percentage. 2.0. 0.04 percentage per month. In case of per annum, what could be the hidden rate of interest? 2.04 percentage into, this is for 30 days. For 30 days, 2.04 means for 360 days, what could be the answer? 12 times 24.48 percentage. This is under simple interest model. Simple interest model. You can keep this as a formula here. Discount percentage divided by 1 minus discount percentage into 360 or 365 days in a year divided by ACP. This is how the formula may be drafted for calculating the hidden rate of interest. The discount being 2% or simply 2 divided by, okay, 2% means 0.02, am I right? 0.02 divided by 1 minus 2% being 0.98. In a year we have 360 days, ACP being 30 days. If the ACP is given in terms of month, the numerator should be in terms of month. Is that okay? Number of months in a year, either 12 or 360. And find out the value. I think it is 24.48%. This is how the formula may be given here. As I told you, this is a simple interest calculation method. Instead of simple interest method, if I want to calculate what is the annualized rate of interest in cumulative interest rate. First month for 100 rupees, 2.04% interest. For the next month, the 100 along with the 2.04, you have 102.04. For that 2.04% should be calculated. Compound interest, simple interest and compound interest. Instead of applying the simple interest, if I apply the compound interest, what could be the effective rate of interest? In that case, the formula may be this way: 1 plus interest rate to the power n minus 1. This is what about the effective rate of interest. 1 plus I to the power n minus 1. You will study all this interest calculation along with the time value of money chapter. So you need to be master with the time value of money chapter. You will have the wider applications throughout the financial management. 1 plus I to the power n minus 1. In this case, the n is nothing but 360 days divided by ACP. This is what about the n. Rather than 12 months, this is nothing but 12 months, right? This 12 is nothing but n. So under this model, 1 plus 0.0204 to the power 360 divided by 30. Rather than simple multiplication, it becomes power. Don't forget to subtract minus 1. So in this case, 1.0204 to the power 12 minus 1 is the effective rate of interest. For this, of course, you don't have any other options. If you don't have the scientific calculator, of course, it seems to be pretty calculation based. 1.0204 into equal, this is power 2. Again press equal, power 3, power 4, power 5, power 6, 7, 8, 9, 10, 11, 12. You got the power 2. So you have to multiply again and again with the same number. So simply press into, then equal. Repeat up to the number of times you require. Then press equal, you will get the value. From there, you can subtract the 1. Then you will be getting the effective rate of interest, which is 27.2742, otherwise 27.42. 27.42. Always remember, under compound interest rate method, the interest payable may be quite a bit higher than the simple interest. Under compound interest, the amount you gain will be higher than the simple interest method. For the first period, of course, the interest will be the same. From the second period onwards, you will get the interest on interest, so there will be increase. There will be increase. Is that clear? Hope now you'll be able to understand. So in your examination, if you have not been given the time value of money logics and all, that interest calculations seems to be pretty difficult, you can simply apply simple interest method. Annualized rate of interest, nominal basis. Nominal basis nothing but simple interest model. Simple interest model. Okay. Here what happens? 1 divided by 1 minus cash discount minus 1. Rather than this way, you can do this way also. Discount divided by 1 minus discount percentage. That way also you can work out. And simply you multiply with number of days or months in a year, 365 or 360 divided by ACP. If the ACP is in days, the numerator should be 365 or 360. If the ACP in month, the numerator should be 12. Right. And otherwise, in case if you want to use the effective rate of interest, means compound interest, the multiplication, this part becomes as a power. Okay. In this case, the formula being, okay, 1 plus D to the power 365 divided by ACP. Finally, you have to subtract minus 1. Is that clear? How will I get this, sir? You can use this formula also. You can use this formula also. This is under this basic logic only. Here, I have given as a formula. Like in this particular illustration, 2 bar 0 net 30. Am I right? If I apply this direct formula, what happens here? 1 divided by 1 minus cash discount being 0.02 to the power 360 divided by 30 minus 1. Otherwise, get me this value first of all. 1.0204. Am I right? That what we have already calculated. Rather than applying this formula, you can use this one also directly. We have calculated this way. The discount value should be in the numerator. The discount value being 0.02. In denominator, the amount you are supposed to pay today itself, if you want to pay instantly, which is 0.98. If you multiply this will be the value. You have to forget. You should not forget to add 1 with this one. So this is the final value. This is the final value. You can represent this way or this way. Whatever it may be, you can understand the logic. So the power n. N represents the number of periods in a year. The number of rest periods in a year being n. 360 and for ACP being 30 means 12 rest periods are there minus 1. That's how you can get the formula. You can mug up the formula or you can understand the logic. If you understand the time value of money calculations logic, you can use that any way as you wish. You can solve the illustration. Is that clear? You no need to mug up the formula given in the text. Right. So colloquially you can understand. Hope now you'll be able to understand this one. Effective rate of interest. If you are not able to solve this under this method, no need to worry about. Simply apply the simple interest in your exams. There will be slight difference will be there. Acceptable. 7th one. A firm is considering offering a cash discount of 2% for immediate payment. The firm likes to charge the customers an annualized effective rate of interest of 24.49%. Calculate the days of credit payment to be allowed to the customer who do not have the cash discount. This question number 2 is also similar to the earlier one or the same like earlier one. But in earlier illustration, we find out the rate of interest notional. But in this illustration, I am going to calculate the ACP. What is the formula here? You know that effective rate of interest under normal simple interest model, the formula is this way, right? Discount divided by 1 minus discount multiplied with 360 divided by ACP. Am I right? This is the formula. Like you can use this one also. And in this case, discount being 2%, otherwise 0.02. 1 minus 0.02 being 0.98. And multiply with the 360 ACP, I don't know, but I have been given interest rate. That interest rate being 0.2449. When percentage value is given, you better convert that to the decimals. 24.49 can be converted into 0.2449. That's how you can convert and you can proceed with. Okay. Now you can solve to get the ACP here. Okay. You can now get the ACP here. Come on. Tell me. Okay. Now finish up calculating this one. Okay, I can take the ACP to the other side. ACP is equal to 0.02 divided by 0.98 into 360. This becomes denominator value 0.2449. Come on, get me the final value. So 30 days. In the previous illustration, we have been given this one. In this illustration, we have to find out this one. Rate of interest is given. The same illustration, the now we'll move on to the eighth one. Credit term, cash discount and credit period. Cash discount and credit period. What is the annual percentage of interest cost associated with the following credit terms? 2 bar 20 net to 50. Assume that the firm does not avail of cash discount but pays on the last date. Okay, they don't pay on 20th date, they pay only on 50th date. Now you have to find out what is the hidden rate of interest. I follow what? Simple interest model. So under this, interest is equal to what? Or interest rate is equal to, I usually use the small I for rate of interest, capital I for amount of interest. Okay. So interest is equal to discount rate divided by 1 minus discount rate multiplied with 360 or 365 divided by ACP. Here everything is given in days, so I will take this value. Scenario 1. In the scenario 1, 0, 20 days, 50 days. Okay, whatever the amount may be, if it is being 100, if you settle that in 20th date, you can pay only 98 because 2% is there. 2 bar 20 net 50. If you fail to pay in 20th date, you have to pay fully on 50th date. Okay, so then the value, the hidden interest rate being the discount 0.02 divided by 1 minus 0.02 and 360 divided by ACP. Don't get confused with the ACP. The ACP will be the difference between these 2 days or the period in which you are eligible for discount or you are losing the discount. You are eligible for the discount being 20, you are losing the discount once you pay the last date. So 30 days will be the period for which this 2 rupees discount is eligible. So divided by 30. Then the answer being 24.48%. That's a basic illustration. In the second case, the term being 2 bar 15 net to 40. Net to 40. Okay. 40. 0, 15, 40. If you pay today, 2% discount you can enjoy. For 100 rupees, you just pay only 98. But instead of that, if you want to pay on 40th date, you have to pay 100 rupees. If you lose to pay on 15th day, naturally you will pay on the last date. Because you try to go for the first cut-off date to enjoy the 2 rupees benefit. If you lose, thereafter you have to pay 100 rupees only. Naturally you will pay the last date, which is 40th date. Exam cut-off date, exam fees cut-off date, 5th August. You try to pay by the time, but 5th August you are not ready. Then automatically the fee may be increased by 100 rupees. then the day may be 15th August. So once you skip that 5th day, you will be relaxed and again you will pay only on the 15th day. You have another 10 days because of anyhow you are going to pay the 100 rupees excess. Why do you have to pay in the 6th day? Only because of paying one day later you are losing 100 rupees. You take another benefit. So that happens in business parents also. 15th day if you pay only 90, else you have to pay 100 rupees. By applying the same formula, what happens? Okay. So 0.02 divided by 1.02, 1.02. This is for how many days? The difference between these two, 25 days. This is for 25 days. So into 360 divided by 25 will be the answer. What is the final value? 29 point or 4%. Okay. This is what about the effective applicable rate of interest. Now, ninth one. Now, question number 9 is all about calculation of average collection period. Average collection period. What is the ACP for the credit term 2/10 net to 40? 2/10 net 40. Assume 20% customers availed cash discount and others paid promptly. So out of overall sales, cash sales being cash discount availed customers being 20%. Right. And what about their ACP? You are given the chance to pay within 10th day so that you will be getting 2% discount. As your businessman, always you think over delaying the payment or pay in the last date so that you can enjoy the 10 days credit period. Even though if you are delaying 10 days, still you will be eligible for getting 2% discount. So if you have the intention to avail the cash discount, usually you pay on 10th day. If you miss to pay on 10th day, definitely you don't get 2% discount. So naturally you will enjoy credit period. Either you enjoy the cash discount or you enjoy the credit period. Cash discount means pay within the first due date, so then you will get that 2% discount. Credit period means you've lost that cash discount period. Thereafter, you still have extra days to settle without any discount benefit. This is called credit benefit. Credit period benefit. What do you want to have? As per the information given, 20% of our customers enjoy the cash discount, means they pay on 10th date. Okay, period. Another 80% customers are enjoying credit period. They will pay on 40th date. And on average, what could be my collection? Okay, this is what about the percentage of customers enjoying the two types of benefits. You have to multiply these two to find out the ACP here. So 2 and in this case 36. Okay, 32. Then if you add up these two, 34 will be the ACP, average collection period. For me, I am giving the offer, the credit term being 2/10 net to 40. If I ask me what's the usual collection period, sir, 20% I will get collected by 10th date. 80% I will collect only on 40th date. What about an average, sir? It's anywhere between 10 to 40. Guarantee that. Now the credit period percentage is higher, then definitely my ACP is closer to the credit period, 40. So it's 34. 90% customers pay promptly, then it should be closer to 10. 10, 11 and 12, that's all. So my ACP is decided based on the availment of credit period as well as cash discount. Usually the ACP should be anywhere between cash discount period as well as credit period. Okay, credit period without cash discount. Hope you will be now able to understand the question number 9. Let's move on to the next one, 10th one. In 10th question, it's just inverse. Credit term is 34 days. Okay. The credit term of 2 bar 10 net to 40 and then the ACP is 34 days. Okay. The credit term is 30, 2 bar 10 net to 40. You can score out this one. And then the ACP is 34 days. What is the percentage of customers availed cash discount? Now what happens? You can enjoy the cash discount or you can enjoy the credit period. You can enjoy one of these two benefits. Now percentage of customers enjoying cash discount may be assumed to be X. Percentage of credit period, customers enjoying credit period may be, rather than naming this being Y, you can consider this one 1 minus X. Okay. Otherwise, total may be X and this is X and this may be 1 minus X. That's how we can think over. Okay. So, X and this may be Y. We'll finish up that later on. And what about the period for these two? For cash discount, 10 days. For credit period, 40 days. For credit period, 40 days. Okay. Now, this is X, this is 1 minus X. That's how I can use. Rather than simultaneous equation, I may use linear equation, one factor, right? It's very simple. And ACP being 34 days. This will be 10x, this will be 40 minus 40x. If you add up these two, what happens? 40 minus 30x is equal to 34. Then 30x is equal to 40 minus 34. Am I right? I take the 40, the other side becomes negative 40. To make it positive 40, I convert this minus into plus. This 34 becomes minus. Otherwise, you can write this way also one more step. Minus 30x is equal to 34 minus 40. I change the sign. This is plus x, this is plus 40 and this is minus 34. Otherwise, 40 minus 34. X is equal to 6 by 30. Otherwise, 0.2. 0.2 customers are enjoying cash discount. So, naturally, this is 0.2 and this one being 1 minus 0.2, 0.8. For overall sales, 20% customers are enjoying the cash discount, 80% customers are enjoying credit period. Clear? Hope now you'll be able to understand this one. Okay, the same illustration I posted the other way. Okay, reverse manner. Clear? Text me, we'll move on to the next one. We'll now move on to the next content, management of payables. Creditors, management of payables. Inverse side. Okay, we'll start with the question number 1 here directly. Then we'll discuss small theory of this one. SSI Limited has offered credit term from its major supplier of 2 bar 10 net to 30. Assume the KO of SSI is 25%. suggests what should SSA Limited do. Now you have to find out the hidden rate of interest. Hidden rate of interest. See, SSA can purchase from his customers, probably supplier. While purchasing, they offer you a credit term of 2/10 net to 45. As now you are being the buyer, your question is, can I go for cash discount or credit period? What do you want to choose? First of all, you have to understand what is the hidden interest rate applicable in this. To calculate the hidden rate, interest is equal to discount divided by 1 minus discount. Okay, into 360 divided by ACP will be calculated. It's not ACP. Okay, I am not sure with the ACP. That's what about the difference between these two. Okay, cash discount period, credit discount period, the difference between these two. This will be how much? 35 days. Don't mean this being ACP, right? So D being 0.02, 2% discount will be there. 1 minus 0.02 into 360 divided by, in this case, this period being 35. Now 0.02 divided by 0.98. 360 divided by 35. What is the ultimate value?
20.99.
This value be 20.99% or 21%. Clear? See, if you are delaying the payment rather than availing the cash discount, if you are availing the credit term, you will be paying 21% interest, or you are losing 21% benefit. So you can plan, you can borrow and pay this. Borrow and pay this. This is the cost for my credit purchase. In order to settle today itself, I can borrow from outside. If I borrow from outside, what is my cost? SSA's KO being 25%. Borrowing cost being 25%. Credit term cost being, credit period cost being 21%. I round off this to the nearest number. Now, which is logically correct? Borrow and pay by 10th date itself costs me 25. Rather than I delay the payment and pay in 45th day, it costs me 21%. So I had to choose this one rather than this one. I definitely won't enjoy the cash discount. I settle the payment only the last date. Because of settling this last date amount, I am losing the 2 rupees discount, which is indirectly having a cost of 21%. Anyhow, in order to settle that earlier, I need fund. Somehow, if I raise the fund from outside, it costs me 25%. Logically, that is not viable. I can save 4%. So I can go this option. Clear? Now, rest of the things are the same. Cost of payables, their cost of receivables, their cost of payables. The same formula will be applicable here also. There will consider being receivables, here we consider this being cost of payables. Rest of the things are same. Now, what you have to note in case of management of payables, especially creditors, the main objectives of payable management, okay, being slow payment. But slow payment, if you are delaying the payment, you can pay today itself, or the supplier says you can take 1 month, sir. What's the benefit? Because there's no benefit, sir, no discount. If you pay today, you will pay 100 rupees, or you pay by the end of 1 month, so you pay 100 rupees. Why do you give the 30 days credit period, sir? It's our by default nature. We offer this to our customers. You can also enjoy. Then if I pay today itself, I don't get any benefit. So instead of paying today, I can enjoy paying the amount with the credit period, 30th date. Up to the 30 days, the amount payable will be kept in the bank and it will fetch me some interest. After that interest, I rotate and settle the money. The same happens. So because of slow payment, profit increases. Okay, nice. Immediately says, at what time I have to pay, sir? Sir, we usually give 30 days, sir. Some of our customers very bad, sir, irritating. They will pay in 90th day. Oh, 90th day, I will also pay 90th day. So I will be very happy. I'm delaying the payment by 90 days, gives me huge interest benefit. Then the supplier will say, this fellow is an irritating fellow. Sahugraki. Right. So that's how it comes here. So slow payment, of course, increases the profit, but creates bad relationship with supplier. That disrupts the supply future. Whenever you are in need, urgent, if you are calling, the supplier will say, if you are supplying to him, you will get the money later period, don't supply. Because he has what? Payables management, receivables management. In receivables management, category of customer 1, 2, 3, he is a defaulter. You don't sell in credit to that person. That's how he may decide. So my credibility will be spoiled. Now, then what you have to do? Slow payment is a good one for increasing a profit, and bad one because of strained relationship with the supplier. Okay, hence it is a vital to manage payable for effective cash management. So it's effectively you have to manage it. What they have to pay, so that profit will also be increasing, and the relationship will also be maintained in decent way. And always you have to consider the difference between cost and benefit. Okay, because of the trade credit, what is your cost and what is the benefit? So this is what about the cost, this is a benefit. Okay, so because of moving from here to here, enjoying the credit period, you'll be spending only 21%, there's a 4%. So better this one. Always remember the difference between cost of availing the trade credit. If you are availing the trade credit rather than paying today, if I am delaying, I may lose what? Okay, I may lose discount. Okay, loss of discount. If I pay today itself, I may enjoy. But if I'm paying later on, I'm losing the discount or paying higher price. 2 bar 5 net 100. If I pay today, I'll get fifth date, I'll get 2 rupees discount, so I have to pay only 98. Else I have to pay 100 rupees. Okay, this is 30th date. Okay. If I settle in 5th day, I get 2% discount. If you are paying in 30th day, you have to pay 100. So the price will be higher because we are losing the 2 rupees discount. And even beyond that, if you take 50 days, what happens? You lose your goodwill. Later on, it disturbs the supply. And cost of managing. You have to maintain the payables accounting. Am I right? To whom we have to pay, in which date we have to pay. Even I get lots of confusions. So many of my friends and relatives, and being the sales representatives of some banks, coming to me to open a credit card or new bank account in XYZ company, I always say no. I need to have only one bank account, only one account. Why, sir? I cannot keep all these things in my memory to pay due date will be horrible. Okay, so very first time I installed Google Pay, GPay, and UPI, and I think Paytm also I installed. And then I have mobile banking all installed. Very first time I get reminder message for credit card payment from GPay, Paytm, UPI, and the bank itself. Horrible. I started paying all. Still the message will come because I routed through UPI. Google Pay will make me reminder. Sir, your due date is there. I thought once, okay, I closed everything. I thought I closed everything. I just forgot. The next day came, surprise message, your card is going to be blocked. Why? Then immediately call, sir, you missed to pay the last due. Is it so? Because 5 messages for one due. Usually I check one message. If there is a reminder close to the due date, I'll settle. Now I get 5 messages where based on one message they're closed. Once closed, I forgot. But remaining 4 messages are warning me. The next month, what happened? Okay, it's a usual warning. I left. So I missed. Do you know what is the due I supposed to pay for that time? It's only 500 rupees. Penalty and all put together, it came around 1500 rupees. Credit card. Not only 1500 rupees. The next day, my CIBIL rate decreased by around 40 marks, points. I got terribly, I say I can fight with them. It's a foolish to spoil my credibility because I have credit card for more than 20 years. I purchased the credit card in 2006 or 7. Okay, it's now 25, almost 17, 18 years. If you go and see my CIBIL code, especially CIBIL score, especially my credit card payment, there is not even single default. In all the three cards, I have 3, 4 cards. In all the three cards, there is no one default. Only because of this 12,000 rupees, that's a default. My monthly commitment for credit card payment is 2.5 lakhs. 2.5 lakhs only because of losing that 500 rupees, I lost my credibility. So I can fight with them. But to fight, I have to spend one day. Send the message and mail and all, and I have to do follow up and all. Leave that. I don't want any borrowings any hereafter. Don't give credibility for me. So what happens, just think over maintaining to whom you have to pay. It's a big problem later on. So you have to keep a team to administrate this one, also a cost. And cost of fulfilling condition. What is that condition? Cash purchaser. Okay, take immediately. Credit purchaser, sir. Okay. You can take in lot of 500 units. Sir, I want only 100. No, sir. 100 means cash purchase. Credit purchase means you have to purchase 500 units in a lot. There will be some condition you have to fulfill to go for credit purchase. Cash purchase, ready cash. One of my friends wanted to purchase car in seconds. It's around $14,000 in USA. Okay, $14,000. He just went and argued, sir, I am willing to take, what's the final price? He immediately reduced from $14,000 to $12,000. The next moment, I have the cash to be paid immediately. See bank account, I'm going to write the check. Oh, is it so? Only $10,000. If it is credit, sir, I have to get the loan for purchasing the car. Wait, 12 lakhs and something, 12,000 plus something. So because of the cash, you'll get some benefit. Because of the credit, you will be losing some benefit. Because they will means levy some conditions. You have to fulfill the condition, the order size, and some other condition. You have to sign some documents. One of my friends purchased the car in credit. I purchased the car for 8.4 lakhs, I think. This car around 8 years ago. My friend, by the same time, purchased for travels. He paid around 11.2 lakhs for the same car. I was surprised. Why? Because I purchased for my personal requirement. This is for tour and installment. Okay, means travels and installment. Because of the travel, until you pay off the full due, he has to go for comprehensive insurance. The comprehensive insurance means anything happens to car, you will get the compensation. And if you hit and the other party died, for that also compensation. You yourself died, your family will get the compensation. Don't expect this. Huh? So all the three compensations are there. Self-drive. Okay, then car and the party on whom you ride the car. All the three will get the compensation, which is called comprehensive. Legally, one insurance is required, which is third-party insurance. So if I hit down somebody else, the compensation payable for that person, okay, the person who got hit, that is mandatory. Otherwise, you cannot drive the vehicle outside, okay, in the road. And for you, it's your cost, so government never minds about that one. So for the third party, it's your mandatory requirement. So I can go for the third party insurance, it may be 6,000 or 7,000. For the comprehensive insurance, it may be 25,000 rupees. So he has to pay more. And all the checkups should be as per the banker's requirement. So if you are borrowing in credit and the demand from the seller may be pretty high, it involves some costs. And if you don't go for this, cost of not availing trade credit, I don't want the credit, sir. Then what happens? You have to pay interest. You have to pay immediately. How can you pay? You have to borrow from outside. No, sir, already I have the balance. How do you get the balance? I get the balance because owner's fund is there, sir. Owner's fund, okay, they will also demand something. No, the owners will say, my money is lying in your company unwantedly. Give me some dividend. Equity shareholders will demand, no, give me some dividend or give me some bonus shares. So that demand will be called interest or cost. That is called interest. And impact of inflation. So I have the policy to purchase only instant payment. I have the policy to purchase only by paying instantly. I go and inquire, what is the price, sir? He says 100 rupees, sir. Sir, if you pay today, it's 100. If you pay 1 month later, it is 105. This is cash price. This is credit price. But my policy is to purchase only cash. I don't have the cashier. I will come 1 month after. 1 month after, I come with 100 rupees. By the time the price may shoot it up to 110. Okay, when I make the money arranged, then the price is shooted up to 110. Market price is increasing always. If I am delaying that, I need to pay more for the same asset because of the inflation. If I purchase in credit. What is journal entry for that? Purchases to creditors value being 105. How much I have to pay back? Only 105. But if I delay and pay later on, I purchase later on 1 month later. If I go and ask for the price, purchase or debit to cash, I am going to pay the cash only after 1 month. The seller says, sir, 1 month already over, sir. The prices has been shooted up. Today the price is 110. I have to pay 110. Because of delaying the payment, I am paying 10 rupees excess due to the impact of inflation. Hope so you could understand the cost and benefit trade of benefits of trade credit. What are the benefits we have? Okay, what are the benefits? Cost of availing trade credit, we have 4 costs. Rather than if you go for not availing the trade credit, you have 2 costs. You have to find out these 2 costs, which is more profitable for you. You can go and choose that. Is that clear? Hope with that we have completed the receivables and payables. Right.